India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC TV18 Motilal Oswal studio. I'm Sonia Shenoy. Joining me is Nigel D'Souza and Survi Upadhyay. Folks, interesting days for the market. Yesterday we had a bit of a soft close, but the banks really were the stars of the show. So let's see how today plays out.
Well, that's right. And no cues coming in from overnight. So
Yes.
we're going to be starting on our own ground.
Absolutely, and I think it's going to be all about tracking the money, right? Show me the money. And the money is coming through from domestic institutions and foreign institutions, and that's kind of keeping the party going, I suppose, with maybe some pause like the one we had yesterday.
I think the party is going, absolutely, right? There's no stopping that. So let's get straight to it. The big cue this morning, actually, and for the last couple of days, has been the kind of strong showing that we've got from the bank Nifty. And, all eyes will continue to be on that. Of course, for the overall index, yesterday was a day of consolidation, a little bit of a negative bias. But I'm watching out for the bank Nifty very closely because once again, we hit an all-time high yesterday. The bank Nifty is now almost, nearing, getting to that 51,500 mark. It hit that 50,000 milestone. There has been large delivery-based buying in a lot of large-cap banks as well. But the focus now is on private sector banks. So just if you look at HDFC Bank, right, in the last 1 month, between, the last 1 month and now, HDFC Bank is up almost 13%. It has been a big laggard, but it's now come back into action. This morning, Macquarie has upgraded a few banks, and in that, they have upgraded Kotak Mahindra Bank as well to an outperform. Macquarie says that the banks have been upgraded after almost 12 to 18 months of an underperformance. And they also talk about how it is private sector banks that are attractive, where the ROCs are expected to improve, but they have downgraded SBI. So they're a bit, underweight on public sector banks, but private sector banks is what they prefer. Interesting over there. But if you look at the overall market as well, right, large buying continues. The cash flows are coming in thick and fast, both from the FIIs and the DIIs. FIIs, almost 8,000 crores of buying is what we saw in a single trading session. So I reckon this morning as well, the GIFT Nifty is suggesting about a 25-point up move. So there could be a little bit of, consolidation with a bit of a positive bias. But given that it's expiry as well, all eyes will be on the bank Nifty and the kind of traction that we're seeing, especially in the private sector banks.
Absolutely. Let's see if we get that follow through or not. Like you guys have mentioned, of course, we don't have cues from Wall Street because of the Juneteenth holiday. However, there'll be, of course, a couple of European markets in focus today. Bank of England is having its meeting. And the expectation is that there won't be a rate cut. And this is despite the fact that yesterday when inflation numbers came out in England, the headline number actually slipped to that 2% handle, which was great news. But then the expectation is the central bank won't cut rates over there because the services side of inflation, that is still elevated at over 5.5%, and it's trending higher than the BOE's comfort zone. The other thing to sort of look out for today in terms of when the US market resumes, the macro data that we'll watch out for, jobless claims and also housing starts. So just putting that on the radar in terms of global action today. Oil is still very much a watch point, and there's been no let-up because Brent even now is above $85 a barrel. We've had more geopolitical commentary coming in, and, the entire Middle East situation remains fairly volatile, with Israel saying that they may launch a full-blown war against Hezbollah. So let's see, there's a lot of rhetoric, and it remains fairly tense. So oil remains bid up. For us, the big numbers that we saw yesterday, FII and DII numbers, just to keep the context in mind that yesterday was a day of massive blocks, including obviously Indus Towers. So therefore, that DII number perhaps is looking bigger than what it usually does. But, that's tremendous buying, 8,000 plus 7,000 crores coming through. So some solid buying from FIIs, which also has actually turned the FPI number positive for June, which is good news. After sustained outflows in the last many months, now we are almost up 2,000 crores, actually 1,700 odd crores in June so far. And that explains the move on the bank Nifty. When the bank Nifty moves like it did yesterday, more often than not, it's because of FII buying, and that's what started. The question that I have in my mind is that, will the money tap keep looking as liquid as it did yesterday from the FPI side, and therefore will we get more follow through on banks? Yesterday, for the rest of the market, there was overall profit taking, and that, I mean, a couple of days is absolutely fine. If it becomes a trend, then it could start being a bit of a concern because the mid caps cooled off yesterday. Barring banks, there was no participation even on the large cap screen. So let's see if that pattern changes, whether the buy on so-called dip, I mean, yesterday's dip was, 40 points, but if the buy on dip indeed plays out as it has, the Nifty 20 DMA, we're still quite a distance away from that, but keeping it on your radar, just around the 23,000 mark. That's where the 20 DMA comes in. We're still, comfortably above that. So let's see how it goes. But yeah, yesterday was a bit of a pause.
Well, that's right. Yesterday was such a volatile day that on a couple of out-of-the-money call options on the Nifty Bank, it went from 1 rupee, 51,500, from around 1-2 rupees to 100 rupees, on the 52,000 call. And on the 51,500 went from around 20 to a couple of 100 rupees. And then the markets came down to zero because the markets ended sub that 51,500 also. We had a fairly volatile trade in yesterday's trading session. Well, today you'll have the Nifty weekly expiry as well that will play out. So that's going to be a focal point on the Nifty. Yes, you had the Nifty Bank that played out. And for the first time in this series, you have the FIs that now are, long and the clients are short. So they have, turned roles, so to say. The Nifty Bank, that's the flag bearer of the last couple of days rally, and that needs to hold its own if we need to trend up from here. But let's get to the point on the FI positioning. In yesterday's trading session, they added close on 40,000 long contracts. They covered close on 14,000 short contracts. And that's why, after a while, you have the long positioning now that is at around 54%. But I think a chart will give you a better picture to tell you what's happened in this series so far. From being net short by close to around 3.5 lakh contracts, the FIs, they covered all the shorts, and now they've moved to around 44,000 net long contracts. That's the FIs. The clients, we have been saying this, they have been getting it right? And the markets have bounced considerably. And with that sort of a bounce, well, you've seen that the client positioning has come down. They were net long to the tune of close to around 3.3 lakh contracts. That's come down, and now the clients are net short on the index as well. Well, moving on to the options data then. If you're looking at the strikes, you have the 23,600 call, 23,500 call. Well, both of them were fairly active. And you have put writing as well that we saw in a trade. Which brings us to the levels then we should be looking at. On the Nifty, yesterday's high. On the Nifty Bank as well, yesterday's high. Both of them become crucial resistance zones. So they come up for you on the screen. On the Nifty, it was 23,666 odd. On the Nifty Bank, it's closer to around the 52,000 odd mark. So that's important. And the options data suggests that the 23,200 mark becomes important on the downside. And for the Nifty Bank, the 50,500, well, that was a crucial zone when we were moving up. That was a bit of a resistance. So that becomes important as well. Stocks that I'm looking at, a couple of stocks have moved into the band. HAL, Indus Stars, as well as Chambal Fertilizer. So these stocks should be on your radar. And a couple of them came out from the F&O band. Yesterday, you had a late surge that we saw on Sun TV. So that's one of the stocks that could be in your radar. And add to the list, JNFC as well. So some of these stocks moving in and coming out of the F&O band. Keep an eye out on them.
Okay, thanks a lot, Nigel, for that. So plenty of stocks to watch out for this morning. And of course, all eyes will be on some of the headline, indices like the Bank Nifty, etc. But let's kickstart the show and tell you all that you can see in the next 2.5 hours. First up, we have some commentary coming in from Venugopal Gare of Bernstein, who says that with strong retail flows continuing to contribute to liquidity, the phase of forced investing continues even when FIIs have been wary. He says with policy tailwinds to earnings growth mostly factored in, it has become increasingly difficult for us to recommend significant purchases at this level. He adds IPOs have commenced and several stake sales will happen to monetize the wealth and transfer risk to public markets. Venugopal says that while at a sector level, consumer discretionary, IT, telecom, metals and transport appears as the hunting ground for stocks for specific opportunities which overlay near-term growth with long-term implied growth expectations, and some of these stocks appear in our India portfolio. To conclude, he says the bottom-up plays, though still existing, are drying up very quickly.
All right, that's Venugopal Lagare of Bernstein. A little cautious in the market given the run-up. Let's get you some money market views as well on rupee. Parul Mittal Sinha of Standard Chartered Bank says the USD INR pair traded in a narrow range between 83.35 to 83.55 in the previous week. FPI inflows and US dollar weakening helped the USD INR slip below 83.50 in the last 2 days. The pair is likely to trade in a narrow range in the near term, driven by intervention by local banks on either side. She expects the rupee to trade in a range of 83.20 to 83.60 to the dollar in the near term.
And on the bonds, Parul says the India rate stayed range-bound with a downward bias as May CPI was lower than expected Further, the global data releases pointed towards signs of softening inflation and slowing economic activity. She expects FPI inflows in Indian government bonds to continue on the inclusion in one of the major global EM indices from the end of June. Parul expects the 10-year benchmark bond yield to trade in a range of 6.9 to 7.03% in the near term.